Good evening, friends, and very warm welcome to this weekend review. Jai Hind to all of you. So, if we really look at the market in current situation where we are in, it has been a market which has been sideways for around 3 weeks and pretty confusing. So today, while we go through this review, I will be taking you through the Nifty levels and major mid cap, small cap levels to watch for to just get an idea about how we should be trading our way through this coming week. Mainly, we have to remember is that the budget is near around the next weekend. So this will be a market which will be quite tentative, but I still get a sense that we are in a buy on dip kind of a setup. So there will be an attempt there where a lot of push will be created downwards. But looks like looking at the way the stocks are behaving and their averages are keeping up and the supports are coming in, I see that there would be a buy on dip efforts that might happen. It's absolutely all about probabilities, but still, I would suggest sticking to the sectors which are doing good is very critical. Buying the stocks near bases is very critical. This I would not suggest a time to buy breakouts. This will be more a time where entering into the retracements would be better. Of course, I am a buy side player, so whatever I'm speaking is quite relevant with respect to the players who are buy side players. Coming to my declaration, I'm not a Sebi registered advisor. I'm very much here to share the studies that I've been doing in the markets for around 20 plus years based on my own strategies, which have been working in the market quite well. I share my ideas over here. All sincere efforts have been done to come back to you and discuss with you only those setups which are high probability. The checks on the fundamentals have also been done that so that at least I do not hand over to you something which is risky. All said, still make sure that you discuss with your financial advisors before really taking any action on the stocks and the setups which I am discussing over here. So let's start with a look at the various indices. A summary of all is shared over here. On the Nifty front, to start with, let's start with the sectors first of all. So if you really look at the sectors which did well this week, it was IT mainly. Very strong moves that have come from the IT sector stocks, mainly coming out of on the back of good results that have come from the Infosys, TCS, the Newgens, and the Persistence, as well as the LTTS. There have been some issues with certain results, mainly looking at LTI, that you do get a sense of caution somewhere. But overall, the results have been going good, and I think they are ahead of the market expectations. That's why we could see a good amount of run. Otherwise, the gainers that you could see was in the oil and gas. You could see IOC making good moves, OIL making good moves, energy doing well, financial services doing well, and infra doing well. So overall, these are the sectors which have outperformed the Nifty through this week. The sectors which underperformed Nifty, mainly it was the bank Nifty, CNX Reality. So this is where we are, and I would suggest that have a look at metals also because overall metals did well during the week. But at the end of the week, there was a correction coming in them. But I think that is something which is healthy to look out for getting good further buys. So that is how the week went with respect to the sectors. If you really look at the charts, which sectors are still looking healthy and in momentum can give you good returns is mainly Nifty Metal, Nifty PSU Bank. This week, a lot of PSU banks have given results. The reaction has been quite negative, but I still feel that most of them had formed a cup and now they are in this process of forming an handle. So if these reversals, typically if these reversals are happening before their previous bottom, I think you still have a good chance in those PSU banks. So look for these setups typically on the PSU bank charts. Those are the cases where you can work for. Of course, IT making its strong comeback. IT is now in a kind of a momentum. So if you pick up IT stocks, the good part is that on the long-term charts, you will see that they have corrected. So this whole pattern which I'm showing you is the massive 20 to 21 October rally that we have had. Now from there, many of these stocks have corrected 30, 40, 50%. They have made their bases and they are coming up. So this is where you can capture now the IT stocks. So IT stocks are actually bottoming out on a long-term charts, while whatever I talked about PSUs, banks were actually something which is the bottoming activity, which is happening on the short-term charts. In fact, in metals also you'll observe this is what is happening. Same like IT, the today some stocks that have brought uh, to discussion, one IT stock as well as one metal stock, you'll observe that the similar kind of setups are coming up in the metal stocks also. If you have seen my previous video, I have discussed about Tata Steel, and now you can see Tata Steel is running up further from these positions. So definitely have a look at weekly charts for the IT and metal stocks while you are picking up. PSU charts, if you keep them at daily level, that is also okay to get you to good setups. Overall market breadth wise, I think we are doing pretty much boring over here. Not much of action happening either ways, up or down. Market is clearly looking sideways and looks like waiting to make a decisive move. Now it will be up or down is something that we have to see. I still believe we are in a buy on a dip mode, so we might get some dips before the budget. But from there onwards, we might actually move upwards, at least in small caps and mid caps. So quite a boring phase currently, but interesting to watch where the ball will swing from here onwards. So that was about the sectors. Mainly keep a watch on metal, keep a watch on IT, and keep a watch on PSU banks comeback. So that is where we are. On the Nifty front, the crucial levels that we'll have to watch if we want to get into momentum, I still stick to 18,200 as the level. If we close above 18,200, market will go in a gung-ho mode that can lead up to quick buying, quick momentum, and lots of breakouts on the charts. Current setup where we are between 18K to 18,200, I would still suggest we are in a kind of a weakish uptrend. When I say weakish uptrend, it is buy on dip kind of a market. So we are still in a buy on dip phase till we are hanging above 18K and below 18,200. From 18 to 17,800, we now get into a sell on a up move kind of a market, sell on rise market. So this is where the weak downtrend will start. And below 17,800 is something we have to remain very cautious. The things can go hard. My overall view is that volatility is ahead of us due to all the speculations and talks and swings that will happen around budget. So if you're someone who has cash in hand, I would suggest wait for a week and then take your decisions. And if you're already exposed to the market, I would suggest uh, be strong-hearted. You will see quite wild swings on your stocks. Try to stick to them, looking at their results and long-term view in focus. And if you really find them going below 200 MA, I would suggest to keep your boundary fixed at 200 MA. Do not hold anything below this, but above this, look at your risk assessment and the quality of stocks. Do not lose them just because of this budget-related volatility. Coming to the bank nifty, on the bank nifty front, yes, there is more weakness currently. I would see that between 42,500 to 43,500 will be kind of an buy on a rise, buy on a dip kind of a setup. The current setup is sideways. 41,500 is somewhere where a kind of a downtrend will take hold on us. So these levels are mentioned over here. So it is up to 42,500. We are kind of sideways below 41,450. that is below this level is something where the base will break and we get into a kind of a downtrend, and uptrend momentum will start at around 42,800 onwards. Give me a minute. Maybe I need to fix up here. So 42,800 is something where an upward momentum will start. I would suggest still waiting till 43,500 would be safer. But yes, around these zones, you would start getting quite strong breakouts in the banking sector also. The thing over here is that HDFC Bank is holding very well and strong due to what run up it has missed so far, and people are gaining confidence with their scheme of merger. The results from Kotak Bank has been quite good. ICICI Bank, I would say, is sticking to the expectations. So hoping that we will cross 42,500 and get into a weakish uptrend, but it will turn more stronger from 43,000 onwards. If you really look at this pattern, we are in a process of making a cup and handle kind of a thing over here. So we are making a base. If it swings up, yes, we are into something which will be very good. But this all structure will hold true till we are hanging above 41,500. Coming to the small caps and mid caps. In small caps, I see we are in a downward trend now onwards. So we are in a zone where we can see that there will be sell on rise situation, and about to touch the 200 MA, things can actually go bad from here onwards. The base before which we can expect a reversal here is definitely around 9,300 to 9,200. So as we go near the budget, this is space which is going to turn quite volatile over here. Coming to the mid caps, a better situation than small caps because we have still not broken this sideways zone. If you look at the small cap, we have broken this sideways zone. We are in a weakish downtrend, but in case of mid cap, we are still within the sideways zone. So till 31,100 withstands, we can see that there can be a up move or a sideways move. The breakdown totally comes below 30,500. So this is somewhere, if we really break down, this is the spot from here. We are really going to see that this thing will break down for the mid caps. So this is how the setups actually look for the mid caps and the major indices. Sectorally, I really see that if I have to discuss, I'll discuss IT today. So IT is something which is turning up well, and really looking at the weekly chart, you'll get a better picture. So you can see over here, this is where the IT index is. So quite well in an uptrend and actually in a momentum on the short-term charts. Big thing will happen if it is able to cross these level of around 31K. So this is where you can keep a watch. If I really bring it to short term, you can observe in short term, it is very well doing good. It is forming a kind of a, here you can see the extended cup, then the failed breakout, and now is coming out of a small freaky short term base, which is looking like a more kind of a round figure over here. So it is a rounded bottom that it is coming up to. What I typically see is that at some point this will swing back and make a small cup and again give us a good move. But the line to save here for us will be 29,186 if you're a short-term player. But otherwise, IT is looking good. It can give further moves till it stays above these levels of around 29K. So above 29K, keep holding your IT positions, keep adding them. This looks good. Actually, many of them are now setting up well in terms of the factor of safety in considering the valuations, right? So that was the first section around the situation that we have within the indices and mainly the sectors. Now I'll talk about two value entry case studies of this week. So this week's value entry case studies, as I always discuss, is that if you want to have high probability setups in the market and tend to have more profits in the market, sectoral alignment is very, very crucial. Sectoral alignment is very, very crucial. And that is where I have picked two stocks today to discuss over here. One is from the metals because yes, they are doing good. Some of them are extended, but some of them I still feel attractive if I look at the long-term basis. And another one I have picked up from the IT. I believe both these stocks are providing good opportunities. And by the way, these have been shared in my personal transactional daily transaction update channel. So you can also subscribe to that channel and get updates in terms of what stocks I am picking up daily or through the week and creating my positions. And by the way, I do hold positions in the stocks which are being discussed over here. So you can assume that very clearly. And you can join that channel to get live updates and be in these stocks much ahead of the time. So the first stock which I am bringing up over here is the metal sector stock. It is Mithun Alloys. Guys who know this stock, this company is pretty strong, pretty good, high return ratios, low debt, and very good management. So on the growth path, Mithun Alloy looks pretty good. And you can observe over here that whenever we pick a stock, try to stick with a stock which has given a good run up earlier. So if the stock has given a good run up earlier, you know that it will have a tendency to give another good run up. So looking at this, retraced from the peak very sharply, and this is what has created a good value proposition. This drop, if you observe from 1592, so let's assume from 16,900, 1600, it was pushed by around 50%. So after a 50% drop on the long-term charts, now the stock is recovering and has crossed this 1120 mark over here. So if you look at this on the weekly chart, this pattern for Mithun Alloy, I would like you guys to tell me in the comment section of this video, what is this pattern that you are seeing over here in Mithun Alloy? You can mention that on my Twitter handle also. In return, I'll definitely take care to give you more options in the market, another good setup as it appears down the line. So look at Mithun Alloy, this pattern, what it is. So this was all around technicalities. Now let's look at the fundamentals of Mithun Alloy, why I think that this is well placed. Whenever I look at the stock, the biggest weightage I give is the return ratio versus the debt. So beautifully placed. You are having a very strong return ratio. Typically above 15 is considered fair enough, but this is around thrice. So this is 54 return ratios with no debt, cash generating machine, and valuations you are seeing are very, very cheap. Below 10 P by E is considered great. This is running at 3.43. On the other hand, stock's price is currently 1121. Book value is 904. So we are running at a book value of 1.24. The negative thing that has happened is in the previous quarter results, there was a big fall compared to YOY and quarter on quarter basis. But overall, for trailing 12 quarters, the company is showing good growth. So metals being a cyclical business, definitely these wild swings come, and this is where the company lost its pricing on the chart. And now what you can see is a good gap created. The price has given 11% return, while the profit growth has been 128%. A low PE stock, high ROC, and absolutely zero debt. No pledging by the promoter, and the promoter holding is 75. I would suggest that this looks pretty good and strong currently to take it on in terms of the value that it is offering to us. Looking at the investors setup now, this is somewhere where you can observe that FIIs have moved out of the stock. So this part being slightly negative, the biggest strength that I see is the value versus the growth gap. that has been created. If I look at the PE ratio, I will actually go by price to book ratio. Historically, if you see the price to book ratio averages at around 1.5, it is hanging currently at around 1.2-ish. So you can observe value wise gone cheap. The valuations have come down while the growth has been, earnings growth has been, the book value has been pretty much rising over here, right? And let's look at the P by E wise, P by V wise. And this is something which will look very attractive to a value picker. You can see it is at the bottom of its P by E for all these years. This is really running very cheap. You can see these big bars of earnings while the valuations are so cheap. I see this is a very tempting opportunity. Definitely have a study of it from your side. Consult with your own financial advisors, what they say, hear it out from them. If you have any questions, any comments, do put it up in the comment section. Now over here, if I compare with the peers, again, when I compare with the peers, I would typically look at the ROC. Most of these companies are where Coal India is totally not aligned to this business. But anyway, I actually don't find a pretty good alloy players over here. Maybe I'm wrong, but anyway, overall ROC, you see one of the best in class ROC with the cheapest P by E. That's music to my ears. Yeah, this is music to my ears. You have great ROC, but P by E is very cheap. This looks a very good setup to me, and that is where I thought I should discuss it with you. Mind you, guys, this is already shared in my daily channels group. So many people are already owning in my network. I am also owning it on the personal setup. But yeah, all well and good. I still feel that this is safe for you guys to make some good money through the coming year. Wishing you good gains over here. The next stock, as I told you, I am going to pick is from the IT sector. So this is Newgen. Now, if you look at the new gen, the best part, the result overhang is done over here. So if you look at quarterly results, we are done with the December results. So no result overhang for Mython. The result is still expected. So that can bring in some volatility. But here we are pretty much done with the December results. And if you look at the overall setup, why I feel that this is a good value base point to look at. Yep. Again, focus on ROE. ROE is very strong. P by E of 19.4. When you see the industry P by E currently running at 30. So this is pretty cheap with the industry comparison. ROC is 27. Very good. Your debt situation, pretty much zero debt. Promoter holding 55. Promoter pledging 0. And you can observe the earnings growth, the profit growth has been bit negative. Return over here has been very strongly negative, you can see. So this is where it is creating some kind of a gap which can be considered over here. And if I really look up to the historical comparison with respect to P by E, you can see that this stock is also running below its average P by E for last 5 years, making it look cheaper, and book to value is not something I would look at for an IT stock. Let's compare with peers. If I compare with the peers, the ROC wise, this stock is running at an average. P by E wise, it is really running quite cheap. This is running quite cheap. Oracle Financial is much, much cheaper. But if you look at the cap size of Oracle Finance is too big. So this might take time to run up. But this guy is, oh, sorry, I should look at the market cap. I'm very sorry. That's why I was wondering why Oracle cap is looking so small. So market cap you can compare, right? And this is 26K. This is 2 or around 3K. So this is quite a 9 times smaller company, getting you a very good ROCE at a very cheap P by E. As very ideal debt situation, not much of a debt. And compared to its peer, if I really look at earnings this quarter, and now I'm not looking at annual earning, I'm looking at quarterly earning comparison, the best quarter to quarter growth and a decent YOY growth over here. So you can see this company in the short term or overall looking at the earnings, it is going pretty strong. I do consider new gen as something that you can consider for value investing proposition currently. The good thing over here is that you are getting a kind of a go ahead from the DIIs. Okay. While the FIIs have moved out, the DIIs have added on to this particular stock. So in the IT sector, you can look at the current situation that is appearing in the new gen software. On to the stocks which I am considering for the breakout. So breakout, I'm looking at Sarthak Metals. So this is the weekly chart of Sarthak Metal. You can see that this is set up very well. Good cup and handle formation over here that happened. From there, the stock has shot up very strongly with good volume. If you look at the daily chart, you would feel it is quite a noisy chart. It is quite a volatile chart. But all the negativity that it owned for last 4 months is getting wiped out. And look at the volumes that you are seeing over here. Plus the earlier high has also been demolished. So I do see selling coming over here from the top. But if you are somebody who can hold this for its volatility that it offers and still continue to go ahead with a good stop loss, earliest stop loss that you can put it around 135, you can look up to this stock for further moves. So this is a breakout stock, guys. So expecting volatility over here. But if you study its fundamentals, a very, very strong small cap. I think it is at a very small market cap. So this is running at 236 CR market cap. So typically very much nearing a micro cap over here, but amazing return ratios, zero debt, strong promoter holding, P/B cheaper than the industry by around 30 to 40%. So fundamentally, it looked very attractive to me, and that is where, and also running at an all-time high. So if you're having something which is running so strong, near an all-time high, but valuations are looking good, you can think about SMLT or Sarthak Metal. Remember, this is a near micro cap business, so volatility expected. But looking at fundamentals and sudden rush of blood toward the stock, I think this is something which can play out better. And let's look at the investors. You would find that FIIs have increased their stakes. So all in all, Sarthak Metal is one momentum stock that you can look at. Again, sticking to the metal sector because it is showing strength. The next breakout stock is IIFL Wealth Management. If you really look at it on the screener.in, it will appear with the name now 361 WAM. Okay. So this is in NBFC or financial related business, good ROCE, and debt is fine in these businesses. So I'm really not looking at it. But overall, profit growth is good. Return is yet to match. And the best part is the structure. If you really look at the IFL structure, you come to the weekly chart. This is where you will find a very strong setup. So there's a lot of commotion, lot of noise that has happened in this stock over the last 4 or 5 months in a very narrow zone. Now, this is something which got me attracted into this stock, because if people are fighting tooth and nails for such a long duration in such a tight consolidation, it tells me that there was some bigger seller over here who has finally been knocked out, and all that energy that got stored into this period, all the investors and long-term players that got into it, can now create a good push upwards from here. So IFL WAM is something that you can consider as into their breakout stocks over here. Now, coming up to the next section, before that, I would like to get you up to speed with one of the new training that I have recently launched. So if you access my training link that I am sharing below this video, you will see that there is a new launch of program that I've done. This is Weekend Investing Triple Strategy program. Now, this program is very intensive in terms of its technical as well as fundamental foundational topics. So here I'll be covering the key averages and indicators I use and the scanners that I use to reach up to these setups. So whatever I discuss over here are actually coming out of these scans and the strategies that I deploy to find values stocks, find breakout stocks, and find trending stocks, as well as the retracement stocks, is something that you will be coming to know through this program. Currently, I'm offering a 40% discount on this program till the 26th of January. So make best use of this offer. Only 20 people would get this discount. Current original price is 19K, around 19.9K. That is, you can say 20K program. I'm currently offering at 12K to you. Overall, this will be for around 6 months duration. You would get recording as well as live programs interactions with me. We have live schedules throughout the weekends of February between 7 to 9 p.m. And don't worry, if you miss any of these programs, you can always get the recordings as well as you can put up your queries in the live questions section. Mind you guys, the special thing about my program is that every month I interact on the key trend following program with all the subscribers to sort out their queries and also interact live. Similar thing would happen with this weekend investing program. If you subscribe to it, you'd always be able to interact with me once in a month. And of course, during the whole program, we will be interacting live. It will be a two-way kind of a discussion over Zoom. Don't miss out this opportunity. Very good for people who are working professionals and struggling to really keep a watch on the market. So these are all weekend strategies. You will get scanners which work on the weekly time frame. Figure out from there and then run your own show independently. Most of the stocks or rather all the strategies that I discuss here are coming from that program. Now I'll discuss about two retracement setups quickly. So Kalpataru Power is a very good retracement setup. Number one, why I'm considering good is that mainly it was coming through a very good uptrending channel so far. So it came in pretty good through this channel, went into the consolidation and has made double bottom setup and about to move up. So Kalpataru Power is one retracement setup that you can look for. So these are the reversal cases. Another is Vadilal Industries. So if you go to the Vadilal chart, there also you'll observe that this was a stock which was running in a good steady uptrend over here. So this is a weekly chart. So here also you can observe that stock was running in a quite strong uptrend channel. Then what it did, it made a cup and a small handle kind of a setup, went out, gave a breakout, and then has retraced recently. So looking at 2600 as your stop loss, you can look on to the short-term chart to get into this retracement setup of the Vadilal Industries. Quite good fundamentals. Further consumption story growth is still there and looking quite reasonably comfortable as it has moved near the 200 MA. Third stock to look for is Agarwal Industrial Corporation. Now, mind you guys, if you look at the Agarwal Industrial Corporation, it was suddenly in news because of the stakes which were taken by Ashish Kacholia. So if you look over here, so you can see Ashish Kacholia had bought into this share, has increased his stakes also through the last quarter. But the best part is on the long-term chart, the stock has corrected. So is at a protective base. So it has retraced this breakout, this cups handle also, and is really near a good reversal point. So Agarwal Industries is something which looks to me actually a good techno funda bet in looking at the investors stakes that are into this, the marquee investors into this, and otherwise ROC is strong. Your debt is quite reasonable for the kind of business they are in. Your earnings pretty good on the quarter, on the yearly basis. So this is a contractual infrastructure related business. So you would see that at some point this is cyclical in nature, but overall looking reasonable to me, very cheap P by E compared to industry, still ahead, but overall it looks reasonable. But yeah, this was a stock which always get chased whenever people come to know that marquee investors get into it. But fortunately now it has retraced, a good point for you to add if you're thinking about it. For accessing my course, you can always look to exceltrocourses.store. These are the programs which are already available. 10% discount on my trend following program. This is on a daily time frame. And this is the special program that I've just bought in on the weekend investing. This is on the weekly time frame that you can work onto it. A very good program for working professionals. So today on the Twitter, I had announced that I'll be discussing about five PSU stocks. So keep a watch for it on my Twitter handle. I'll be sharing five good stocks which are coming out of a base, long-term base on the PSU side. Very nice dividend yield also they are providing. For all your support that you have been giving me so far, I am very thankful to you. And let's look forward to again connecting into the new year and make it more prosperous for you, since this is our first connected this new year. So wishing you another happy new year, and winding up for today. Have a great week ahead, guys. There is volatility ahead due to the budget, but if you're holding on to good fundamental stocks, maybe be good to let them play through the volatility. Holding up to 200 M is something that you can still think about. Have a great evening and have a great week ahead, guys. Take care. Bye bye.